She's a Mona Lisa. Everyone's lining up to see her.
So our group have decided to choose chapter 8, which is the foreign sector. So I will explain a little bit of introduction for this chapter. So let's get started. So the foreign sector refers to the open economy that comprises everyone and every single thing outside the political boundaries of the domestic economy. So what are the meaning of the open economy? So an open economy is the one that interacts freely with other economies around the world. So second, an open economy interacts with other countries in two ways. It buys and sells goods and services in world product market, and it buys and sells capital asset in world financial markets. So the foreign sector involved in two exchange flow, which is import and also export. So import and export can be combined into a single concept called net export, okay, which refer to value of total export minus value of total import. So net export shows the foreign trade or exchange flow of goods between countries. So if the value of net export is positive, it means the export exceeds import. But if the value of net export is negative, the import exceeds export. For your information, there are three macroeconomic sectors, which is we have household, business and also government sector. They are considered as a component of closed economy. So what is closed economy? Closed economy is one that does not interact with other economies. There is no import, no export and no capital flow at all.
1, 2, 3.
There are four of contributions and importance of foreign sector. The first one is spurs continuous development by creating employment and modernizing the economy, provides a wider variety of choices for consumers, increases competitions and lowers prices, and enables technology transfer. The foreign sector is important when a country cannot satisfy its own needs effectively within its closed economy that converts to an open economy. The country then imports goods and services which it cannot produce on its own or cannot produce efficiently. It specializes in producing certain goods and services for export to gain a comparative advantage. We go to the next factors, which is provides a wider variety of choices for consumers. A foreign sector creates a wide choice of goods and services for consumers. A country with a surplus of certain goods can export them in exchange for goods which the country lacks. Next importance is increases competition and lowers prices. An increase in foreign competition will drastically lower cost or price margins. Open markets lead to an increased number of producers competing for business. In order to survive, these producers will strive for efficiency, which tend to bring down production costs and prices of goods and services. This in turn will benefit consumers. Last part is enables technology transfer. The foreign sector enables direct transfers of technology through the involvement and investment of foreign companies in Malaysia in terms of their expertise and capital. Technology transfer will enhance technology.
Wipe it down. Wipe.
Direct investment is a direct investment in production or the business in a country by a foreign company. The FDI can happen either via outcome are as follow.
The next rules and important is transfer of knowledge and skill, where FDI leads to technological improvement by directly raising the level of technology in the whole economy. FDI are crucial to creating a relatively higher skilled labor force. Next, infrastructure upgrade, where investors are attracted to invest in a country which possesses better infrastructure. The multimedia super corridor has successfully transformed Malaysia into a knowledge economy. The public in general also benefit from the high-speed web connectivity around the world. Last, the rules and important is assurance of export market and foreign exchange gains. With assurance and greater export market penetration, FDIs produce economies of scale, thus gaining foreign exchange earnings for the host country. Foreign export-oriented manufacturing is concentrated mostly in producing electrical and electronic goods. As all export trading are in US dollar, FDI inflows are expected to increase the value of the Malaysia. That's all.
So hi, my name is FADHLINA and I am an economist, so I would like to share my knowledge regarding economy, and I've received a lot of questions regarding FDI, and in this session I would like to explain what I know regarding the factors that could influence FDI, and I really hope that my sharing today could be beneficial to all of you. There are several factors that affect FDI. I'll move with the first one. It is well-developed infrastructure. So this includes all transport structures like roads, water supply, telecommunications that support the society to facilitate production of goods and services. So for example, internet and video conferencing is the bridge between a parent and its subsidiary companies. The second factors that affect FDI is also the large market size and lower production costs. A company wishing to make an FDI will first analyze size, market, and number of competitors in the host country. So here it means bigger market size is to support a higher volume of sales. The third one is educated and skilled workforce. So skill levels in a sector is more important than labor cost. Knowledge and skillful workforce is paramount for MNCs to run their entire management from upper level and highly trained employees. So MNCs need employee who has marketing knowledge to adapt their product. So next is lower and stable exchange rates in the host country. So a country can attract FDI by depreciating its currency, as this increases capital invested and makes trade relatively more profitable to exporters. So the other factor would be supportive government foreign investment policies and incentives, economic policies, and political environment. So a lower corporate tax rate imposed on corporate profits will increase FDI returns and hence attracted FDI inflows. So lower tariffs on imported and exported goods will encourage FDI, and efficient administrative processes and delivery system will attract FDI. And not to forget, last but not least, is the good fundamental economic strength like how inflation and interest rate. And yes, I think that's pretty much about it, and I hope I helped you guys to understand about this better.